Hello there, Maverick Traders. This is Rob Reinhold, and it is October 5th. The leaves are changing. Fall is definitely here, so let's get into it. In this video, we're going to cover the day. We're going to look at the news of the day. We're going to look at the broad markets, and we're going to look at what commodities did. Then we're going to update our current market score. Did we get a scoring change today? And if we did, what does it mean? If we didn't, where should we be looking for new trades? And of course, we're always looking for new trades, so we'll have a couple of bullish trades and a bearish trade as well.
This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Today was a really flat day by the end of the day. Now, at the end of the day, we had the Dow was basically flat, S&P down 0.1%, the Q is down about 0.33%, and the Russell was actually up. The Russell's been the worst performing index, and it actually had a decent day today. Now, on the surface, these all look like a flat day, but look, we were down pretty substantially at one point. NASDAQ was down over 1% at one point, S&P down about 0.75%. We had a big recovery in the middle of the day. Oil got hammered again after losing about 6% yesterday. We lost another 2% today. The energy sector has definitely been feeling it, and gold continued to slip, but not as much as we've seen. So the news today, we had some jobless claims news in the morning. This put the market back on its heels because we'd actually had some decent futures in the morning, and then when this number came out, this is a very low number. Remember, yesterday we got the ADP employment report that was a lot weaker than expected. People are thinking, okay, we're finally going to get that increase in the unemployment number that the Fed has been talking about. This number, 200,000 jobless claims, is very, very low. So that took all the optimism we got yesterday and erased it. So what happened in the morning? The dollar and the bonds spiked up again, which caused the market to go down. But ultimately, the market did close pretty much flat for the day, and we saw the dollar and the bonds give back some gains. So let's take a look at what the market did today, and I really want to focus on the last two candles that we've seen. Yesterday, we got a green candle. That was the first bullish sign in a couple days, and we needed to see a confirmation candle after it. Now, I want to go back to the last couple of what we call capitulation bottoms. So if we go back to the bottom in the middle of August, we get these capitulation bottoms, and then we get a lot of buying out of them. Even here, big move down, we get this green candle, and you can see a lot of buying after it. Here's the problem. Even this one here, we got a reversal candle here, and we at least got 2 days before totally falling apart. This isn't a great candle. However, it's not a terrible candle either. Remember, this market had been down pretty substantially for the last couple days. We got a green candle, and we were put under pressure today, and it recovered. We would have much rather have seen a nice fat green candle here if we were looking for a bear rally. This one isn't as good as a green candle. However, there is a lot worse candles that this could have been. So I'm going to put this in a neutral. So we got a bullish candle yesterday. We got a neutral candle today. However, we do have a long lower shadow, so it's telling us there are people out there nibbling to buy. If this was just a regular Thursday and we didn't have the payrolls report tomorrow, I would say we're probably still looking at a little bit more bullishness coming in the market over the next couple of days than bearishness. Thinking we're probably going to have another bear rally like we did a week ago. Here's the problem. Tomorrow is the payrolls report. Tomorrow is going to be a big green candle or a big fat red candle. 50-50 here. Here's what I can say. If it's a green candle, it is likely to be short-lived before it hits into some resistance and falls apart. If it is a red candle, it probably has some more follow-through behind it. So tomorrow, like I said, you flip a coin, what's going to happen? If we do get a big rally, I think the biggest thing you can hope for out of this market is about a 2 to 3% rally to the upside. I think that's like best case scenario. If the market goes down tomorrow because of the payrolls report, I think we could see another 3, 4, 5, 6% to the downside as we're in this very seasonally weak part of the year here in the market. So I actually think we're going to get a bounce. That's my call. Don't take anything about that call because I'm not putting a bet on that at all. I'm fairly neutral going into this report, and I will be making a trade off of the report after the report. But going into it, I'm really playing this very, very neutral. But I do think we get a little bit of a bounce. There are some buyers out there wanting to buy the market if we can just get a little bit of news to help it out. Here is the bond market. This is the 10-year bond. Big breakout here. And you can see it's pretty much been a one-way trade. We do have this reversal candle. Boy, that wasn't much of a confirmation, but at one point it was a green candle and we closed down closer to the low than the high. It looks like bonds do want to at least take a little breather here. So if bonds and the dollar take a little breather, that is absolutely bullish for the stock market. If we take a look at the heat map today, it really doesn't tell you anything. 50% of the stocks were up today, 50% of the stocks were down. It really was just a very mixed day across the board. So here's the question. Did we get any change in our numbers? Our numbers are the 20-period moving average, the 50-period moving average, and the slope. Nothing has changed. We are still very far away from our 20, even further away from our 50, and these are still clearly sloping lower. So no, we are still at a -3. That being said, anyone who's been listening to me over the last week, I've been talking about how the worst 6-week period of the year is September 1st through October 15th. We are October 5th. Last year, October 15th was the low for the year. It was the actual low. I doubt that's going to happen this year. It might come a little earlier, it might come a little later, but I do think we're in this seasonally weak period. I don't think you want to get too bearish here. You should already be bearish. You should have been bearish for the last at least 2-3 weeks at least. I don't know if you want to be throwing on a ton of new bearishness here as we are approaching the end of this week's seasonality period. This could easily be a year that it doesn't follow and we just fall all the way through October, November, December. But I think it's prudent here to not really pile on any more on the short side unless you're not short enough. But if you're already there, if you're already short, this is where I'm actually pulling back a little bit on my bearishness going into this meeting and going into the end of the seasonality period. We will be updating all of our information over the weekend in the trading room. We'll have tomorrow's candle to really give us a better indication of what's going to happen over the next month. Let's take a look at some potential trades.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
I actually found way better bullish trades than bearish trades. It's kind of a funny thing when that happens. On the bullish side, we have XPO. XPO is a shipping logistics company. And you can see that we've got some serious resistance up here at 76. We have been high basing. Now remember, the market has been going down this entire time. This one has been going sideways. One of my favorite trades is when the market goes down to find the stocks that haven't gone down and they're high basing. Because when the market finally does bottom out, everyone wants to go chase the bad ones, chase the ones that lost 40%. No. You want to chase the ones that didn't lose anything when the market went down 10%. This thing is ready to go. It just needs the market to give it a push. If we push up above the 76, I like this trade all the way up to 80. If we were in a more bullish situation, I think you could call for 85, 90, but I think that is the most bullish you can get in the current market we are. XPO looks really good to me. Next up on the bull side, here we've got United Health. We've got lots of resistance that we hit back in here. We sold off. We bottomed out well before the market did. And look, this thing's been moving its way up. And it just came right up to that previous resistance point, and it's been fighting to try to get through it. Today, it fought through it. And this was on a day that the market was down most of the day. This thing closed up. For me, this thing is ready to go. Look, I'm going to 520. That's my target. So I'm going to do like a 515, 520, 510, 520, either vertical or diagonal. I'm not looking to be a hero out here on any trade on the long side. Be very moderate on your targets on the long side as this market is in a bearish move to the downside. Once we turn around and we get the market above its moving averages with the moving average sloping higher, then you can get more aggressive on your bullish trades. And on the bear side, we've got Wayfair. This is a stock that does not look like it has bottomed. So the market looks like it's trying to hang on. This thing hasn't tried to hang on at all the last couple of days. Take a look at it. We've just now broke down below. This thing is in some trouble. If the market stays bearish, 45. As you can see, I'm a lot more aggressive on a downside target because we're at a -3. Now look, I am going to be a little bit more cautious because of seasonality. You could take a look at a 50 target on this one here. So a 50-55 bear call spread. You're probably going to get about a $4 credit. And that means you have $1 at risk. If it doesn't go and it takes off, you lost $1. If it does move down below 50, you've got 4. This is a pretty aggressive trade. You don't have to be this aggressive. Anyone who trades options know you get to choose how you play this. But if the market does break down tomorrow, I'm going to be looking at a 50 target on this one. Let's talk about tomorrow. We are at oversold levels. We've just had some big moves down. The NASDAQ is down about 9.5% over the past month and a half. S&P is down about 6 or 7% in a bull market. And again, we were in a bull market in May, June, July, in the first part of August. Bull markets have pullbacks, which are 3 to 5%. They have corrections, which are 10%. And then they have bear markets, which are 20% or more, which means it's not a bull market anymore. We are in this correction point. We have no idea. This market could continue to go down, and that was the top that we had in August. But if this market continues to go up right around this point, ends up being a pretty decent buy point on about a 10% pullback in these markets. We'll have to see what happens. I think it's a little too early to get bullish. I just think it's a little bit prudent to get less bearish here. It is way too early to get bullish until we get some technical confirmation from that. Tomorrow jobs report will give us a lot more information. They're looking for 171,000 jobs, 3.7% unemployment, and plus 3.3% wages. Like I said, we will update you tomorrow in the trading room on the numbers, and we'll give outlooks for next week. Happy trading, everyone.